Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, and I'm recording this as usual late Friday morning on September 29th, last day of the trading quarter anyway. So last week was a bad week. Early this week, it looked like, oh boy, but we have found some support here this morning. We had a good inflation report. The market's bouncing some further here. And I do think there's some near-term positives. I mean, I'm not a big oversold guy, but you've now had maybe 7, 8, 9 weeks of almost, very, very few stocks hitting new highs. I saw something where the S&P spiders hit 9 straight daily lower lows, which actually is very rare and usually occurs near low points. Sentiment's pretty negative, so on and so forth. And I still see a lot of action out there that I don't want to say this like it sounds like complacent, but I'm seeing a lot of sort of normal action in a correction, meaning stocks are down. I'm not buying them. They're down 20% or whatever. They've broken their 50-day lines, but it's not 2022 out there. It's not, it rallies into resistance and then it's down 28% in the next 3 weeks. It pulls back, but it pulled back to its August low or something like that. I'm seeing a lot of action. So, near term, we'll see, if interest rates can back off, that sort of thing. And I'm not a big seasonal guy, but late September is usually kind of the worst time of the year, number one. And number two, I've been around a while, and like a July peak and a correction to an October low before a year-end rally is, it wouldn't be the first time it happened if it does happen this year. So I'm keeping my eyes open. All that said, if you're short term, maybe there's some opportunities there. If you're more of a position trader like me, intermediate term toward longer term, we just simply need to see more. All the indexes and the vast majority of stocks are still below moving averages, 50-day lines and all this sort of thing. And we're just not seeing, like I said, not many stocks hitting new highs. Interest rates are still in an uptrend. We just need to see some more power. Now, I don't need to see stocks, I don't need to see 500 stocks hit new highs or the indexes go back to their July highs to start buying. But I think in the near term, and I'm going to go through some of these, some of these stocks that have either pulled in normally and held the 50-day line, which is unusual, or, corrected normally and have trying to round out some launching pads. If we start to see some real power among those stocks, as opposed to the names that are down 45% and they bounce, that sort of thing, that would be an encouraging sign. And I have to say, so far, it's very, very, very early, but so far, there's some encouraging signs on that front too. Okay, but at this point, it's just it's good to get off our knees. Now we just need to see follow through, not just in terms of upside in the indexes, but some key individual stocks that are holding up well, potential leaders start to flex their muscle. If we do, put some money to work. If not, right now I'm pretty content to be, relatively cautious. In Cabot Growth Investors Model Portfolio, we actually raised a teeny bit of cash, but we're still basically 55% in cash. Like I said, maybe small position or two if we start to see some stocks, pop back above their 50-day lines on big volume and hold it, that sort of thing. But at this point, pretty content to hold the cash and just let the market kind of futz out here. Maybe this is just a 3-day bounce that reverses. Maybe this is the start of a huge new sustained move. There's no need to guess now. Let's just let the market tell us in due time. Okay, let's hop into the charts. As usual, I'm using a program called MarketSmith. It's a product of Investors Business Daily. You can learn more at marketsmith.com. Get out my pen. So again, I'm recording this sort of latish Friday morning. Here's the NASDAQ right here. And, green is 25-day, red is 50-day, simple moving averages. And we're just still, well below those. Now, we're also kind of trying to hold the August lows. So it depends how you want to call it. If you want to say maybe the intermediate term trend, you could, if it rallies a little bit more, you could call it neutral, but it's definitely not up. I mean, to me, it's definitely still down. And, we just have some daylight here to make up. So far we've just slid basically 1,100, 1,200 points in the NASDAQ, and now we've bounced, a little bit. Let's just see if it can go further. It's pretty much the same across the index. I mean, I'm not trying to make it too simple because, like I said, there are some near-term encouraging things. But at this point, unless you're a really short-term person, it's just kind of hard to look at, if you just draw kind of a straight line to the closes here, it's kind of hard to look at that and say it's anything more than a bounce. Okay, we'll see how it goes. If anything, I would say we're still pretty, quote, oversold. Again, I'm not a big oversold guy. But, maybe there's just some daylight here to rally into, and we'll see how that rally goes, Small caps and mid caps continue to kind of bring up the rear. They've been a little bit stronger this week. I think they're up 1% to 2% on the week sort of thing after falling early in the week. But at this point, again, just well below even the 25-day line. Just to reiterate, we need for our intermediate term model And it works best when everything's in gear, which I will say everything's fairly in gear right here, which is, I won't say good, but that's a sign of normalcy. But we need to see the indexes basically get above this 25-day line, and we need to see them hit kind of a 5-week high, higher than they were 5 weeks ago. 5 weeks ago at this point is somewhere here. So it's going to take a little time, at least when you're looking at the indexes. But we'll take what we can get. Nice little bounce here, and it's certainly better than what it looked like earlier in the week. Okay, just running through a variety of charts and indexes and stuff before I get into stocks. This is the 10-year note yield on a daily chart. This was kind of your breakout. This was last Thursday after the Fed and hawkish and all that stuff. And you can see we've run up pretty quickly here. I mean, this 44 means 4.4% on the 10-year note. But we have pulled in here, but again, it's kind of like the opposite of the indexes, right? Have we pulled in? Yes. Am I glad to see it pull in? Yes. Has it changed the trend? No. It's still in an uptrend here. Ideally, this is some sort of blow off and inflation collapses and, hey, if rates come down here, I mean, it wouldn't surprise me if the market just went straight up from here, but there's a long way from here to there, okay? Same thing with sort of the 5-year note. You could look at whatever interest rate. It's kind of a similar thing. You kind of had this pop higher last Thursday was kind of the breakout in rates. If you look at a multi-month chart, you can kind of see that was sort of a breakout. So, hey, ideally that's a false breakout and we come sinking back in here. That would be good news. But at this point, obviously, the intermediate term trend is clearly up for rates, okay? Another thing to keep an eye on, which always seems to pop up when the Fed is tightening, maybe for too long, we'll see. But, financial. So this is the XLF. Regional banks don't look good either. But, the XLF is, more of the Bank of America, Citigroup. And, clearly below the August low. We'll see how it goes here. It's just getting a little dicey. You have some names like here's Citigroup, not just below. Just new lows. That's not good. Bank of America, BAC, just kind of scraping lows for the year. So just something to keep an eye on. Sometimes you get these big banks to kind of give up the ghost, and that can lead a bad move in the market. But at this point, I would say the market's held up pretty well despite that. So if the banks can hold up, but just something to watch. As always, I like to look at the defensive names. Again, I know it's interest rates. I know it's the dollar. But XLP, there's no desire for safety here. It's kind of been, like I said, things are kind of in gear on the downside. I know that sounds bad. It is bad. I'm not trying to make it sound good, but it's not like, some of the markets here, some of the markets there, and it's kind of all over the place. Right now, it's kind of in unison on the downside. POWA is kind of a secondary defensive index. Not quite as weak, but obviously not acting well either. I will say the growth stuff, again, I don't want to read too much into it, but let's see what happens. A lot of these indexes and growth funds and some growth stocks, they had their January high, their July high. They pulled back into early mid-August. Some of them really just, were destroyed. Then some of them rallied back. Some, of course, rallied to new highs, but now they're kind of coming back. Some of them are shaken out, or they're kind of right back in toward that August low area. If it can really power ahead from here, that would look like a little bit of a shakeout. Again, a lot more to prove for the market, but you just kind of like to have these scenarios going on. Anyway, chip stocks, I guess I would just say they are what they are here, but they're bouncing. Let's see what happens. I actually kind of think I'm seeing more stocks in the group and the index itself that could, if the market followed through on this rally, start popping above the 50-day line, stuff like that. So I'm keeping an eye, and that's really been the leading growth group all year. I know it's been kind of in this doesn't look great on the, over the last 3 or 4 months, but let's just see what happens going forward. And just kind of running through it. The ARK fund, again, not a big ARK guy, but, kind of near this low, trying to bounce back up. We'll see what happens. IPO fund from Renaissance, symbol IPO, same sort of thing. So the longer they can kind of hold above the August low, and obviously the farther this bounce goes, the better. We'll just see how it has to play out, okay? Right now, there's just not much to do, in my opinion. I hope I'm wrong, and I hope this is a great time to buy, and next week, things are really following through on the upside. But at this point, I just like to go with what I see, and right now things have kind of rallied back. It's good, but a lot of them are either still pretty buried or just there's a lot of, they're right into some resistance here, okay? Now, in terms of individual stocks, like I said, the good news is I don't see a lot of, you can look at stuff like here's Samsara, which I've mentioned before. To me, this is just abnormal, ton of volume, tried to break out, right as the market started to keel over. I'm not saying the stock's going to $10, but, it's just kind of the breakouts failed. Now it needs to kind of rebuild everything again. Okay, but I'm just seeing a lot of stuff like here's NVIDIA, NVDA obviously, had a huge run obviously, and it's kind of pulled back in here. It's pulled back again. Is it pretty? Is it great? Is it tedious? Oh yeah, sure. But you look at the weekly chart. It's not abnormal here. There's no selling volume in here. The numbers are still good, and it just looks like kind of a digestion phase at this point. I mean, maybe it opens up next week. This would be a name where, I'm not recommending anything on these videos, but I'm just saying this would be an example of a name where, say, the market, futzed around on Monday or Tuesday, and then boom, it kind of follows through on its rally next week, and you get some sort of big volume stick down here, and NVIDIA's up, 5% of the day, whatever. That would be one of these things that would kind of make you pay attention, especially in a stock like this. But there's some names, these are kind of the names I'm looking at. Uber kind of is already, so you can see it's already sort of toying with a 50-day line here. The question is this going to be, resistance and we kind of come back down, or can we really push through? We'll see how it goes there. This one's a little bit weaker, but I'm still watching ACLS. This is ACLS. It's been a leader all year. I've mentioned it many times. And it more than doubled here from the breakout. I believe this broke out. Yeah, it was like the first or second week of the year. Had a big run, correction. So a huge run up to here. It's been a little ugly, but it's basically pulled back 20 to 25% high to low, which I don't think is unusual given the move. But let's see what happens. Again, can it pop here higher above some moving averages going forward? Just a name to watch. Last one, there's a bunch of chip stocks, but last one, this is Broadcom, AVGO. Not as dynamic, obviously, but again, you kind of have this, call it a double bottom, call it whatever you want. Can it sort of get back above that 50-day line? It's just kind of some stuff. Even if you don't buy these stocks, I like to watch it like Broadcom. It's not really my cup of tea, what a pond that I fish in. But, it's a big institutional stock in a leading group, a little bit of an AI flavor. This was the AI run back here. So if this thing can power ahead above the 50-day line, big volume, it's probably a decent sign for chip stocks, but also, growth stocks as a whole, okay? Just a couple other names sort of on this front. Monday, I've mentioned, again, is the 50-day going to be a great time to sell and then on the way to much lower lows, or is this kind of the double bottom, So just be prepared for either one. I mean, if you don't own it, you can just watch it, obviously, but just be prepared for either one and see if there's some upside follow through. Tesla, which, it's kind of interesting. It did have... Well, I won't go into the past, but it's kind of had this nice stage here. Again, I don't look at this correction in the last, 2 or 3 months as totally abnormal. You look down here, there's been no massive, breaks or declines. You're not seeing, this sort of action back here. This was 2022 when it just kind of melted down. You're not seeing that yet. It's all over the place, don't get me wrong. And to be honest with you, it's not really something I'm that close to. But again, it's kind of at the 50-day line here, and then you have resistance up here. Can we start to see some upside power in a name like that? And then just outside of growth, just to give you an example, this is like VMC. It really hasn't bounced very well, but this is construction aggregates, economically sensitive. Pretty decent correction here, but not hugely sharp. And again, you're just seeing, can some of these names pop higher above obvious resistance? So those are just a smattering of names. Other names that have just held up well, basically, are also what you want to see acting well. So this is NTNX, if Market Smith, here we go, wants to cooperate. I mentioned this before, big long base in here, nice and tight in here the last few months, had the breakout on, I'm almost positive this was on earnings. Yeah, this was on earnings. And it's been, kind of up and down 3 points at a time here. But overall, it's still above its 25-day moving average. That's pretty good, and it's holding in there pretty well. One of these subscription plays, Splunk got bought out, so maybe that's helping a little bit. But so far, so good. They did have an investor day this week. I like this right here, this relative performance peak. This is relative to the S&P 500, so a new high here, whatever that was a couple of days ago. Certainly not the worst thing. CrowdStrike, mentioned this before here. Just, the weekly chart kind of takes out some of the noise. It had the recovery, had this flat base. It did react well to earnings here. You can see this about a month ago. And since then, it's been chopping around with the market. But I mean, given that the market, in September, pretty much pulled back to the 50-day line, starting to bounce here. We'll see. We'll see how it goes. But this is a name. This is what you want to see, is these sort of stocks. I'm not saying they have to be up 1,000,000% on the first 2 or 3 days of the rally, but you want to see these things going as opposed to a stock that's down here and it's like up 10% off its lows. so what? You want to see some potential leadership moving. ESTC, this is a elastic, kind of a storage sort of thing. I think I mentioned this last week too, but anyway, kind of a nice tight pullback. Had 3 weeks tight at the bottom, if that's your ball game here, and it's actually been up. And we'll see how it closes this week. 1, 2, 3. This is going to be 7 weeks up in a row in this environment. It's pretty good. So it's kind of noteworthy there, and it certainly looks like it kind of wants to get going if the market can get out of its own way. So far so good on elastic. Lululemon, not, we'll see. It needs to follow through on the upside, but it did have this is very, very tight in here. And then again, it kind of gets dragged down by the market. But look, after this big earnings move, there's a bunch of these blue accumulation, I call them big blue sticks, but skyscrapers, whatever you want to call them. And then last 4 weeks, all basically below average volume. We'll see how this week comes in, but pretty tight in here, obviously. Obviously, what you'd be looking for on the daily chart is just some sort of, smoke up a chimney type move, okay? YETI, just running through a few more names. YETI's been holding well. Again, kind of a turnaround. Got killed, bottomed out, blah, blah, blah. Started to change character about 2 months ago on earnings. Looked like it was going to get ready to go, going to get going here. You can see kind of ramped here. Market got in the way, pulled back, but just pulled back just to the 50-day line. Relative performance line near a new peak. That looks pretty good. On to innovation. This actually could have been in the chip stocks. But again, it kind of held up. This is a smaller, very volatile name. Okay, ONTO. But had this big move here. Kind of a choppy sideways correction. Kind of hard to define that, but kind of held the 50-day line. Popped on some news. It had an order news, and then it's kind of pulled back right in here to the 50-day line. Just kind of finding support where it should, and now starting to bounce. Let's see how it goes, but that's certainly one. And then on the smaller side, this is Fabrinet, which is one of these. There's a few contract manufacturers that look good, but nice big base in here. Big, huge, really decisive breakout on earnings. Again, it got thrown in the washing machine a little bit here the last couple of weeks, but broke out again on new highs, on good volume to new highs here recently. So there's certainly a lot of stocks that look good, and I think even if you literally were 100% cash, which I'm not saying you should be, but I'm saying even if you were, just having a list of these stocks and just watching their action. If you have a bunch, because what I've seen a lot in the last 2 years, but even on some rallies that happen, you just see these things that are holding up. Oh, it's holding up near its high, and then the market bounces and the stock just sits there. It doesn't go anywhere, meaning they're really not buying those. They're buying the kind of the beaten down junk. And so far I have to say the first 2 or 3 days, it's been fairly encouraging. I think Duolingo, look at this one, break it out to new highs. So there you go. Like, this is kind of what you'll like to see, where it had it already had its correction, tried to get going, market got in the way for a week or two, and now it's kind of letting loose on the upside. This is, again, super volatile. It's just up, 25 points here in a few days. So who knows what happens, but that's sort of encouraging action. If you start to see that over more and more stocks, and hopefully at least 2 or 3 kind of growth areas, that would obviously be a good sign for the rally if we follow through on the upside. As it stands now, though, I think the simple thing is, we just need to see more. We just need to see it's a good, I'm up for 3 days up. It's a good start. Maybe we power ahead next week on huge volume. Hopefully interest rates collapse from here. I'm all for it. But let's just let the market prove itself. The big thing here is if we get, we've seen a lot of these 4 to 8 or 10 week maybe rallies in the market that are a little disjointed and narrow, and this is working, but this isn't. At some point, we're going to get a sustained rally where not everything, but most everything is working, where things kind of let loose on the upside. That's really the cheese that we want to get to. But let's just wait to make sure this isn't another trap set by the market, okay? That's all the time I have for today. As always, thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.